All right, so thank you everybody for joining. My name is Brian. I'm from the Bitcoin Association in Hong Kong, which was founded in 2014. We are here to be the trusted source to try and help more people to learn about Bitcoin and to try and understand more about the ways that Bitcoin can solve a few of the challenges that we're having today. You're probably wondering where I am. We've got a nice little cyberpunk type of environment over here. I'm actually at a place called Genesis Block, which is the premier OTC here in Hong Kong. What they do is they help with the education, learning, they provide event space, and they also provide a OTC trading service. If you have a chance to come to Hong Kong and you want to visit this place, you can feel welcome to visit their address from Monday to Friday here in Wan Chai and Hansi Road. You can schedule a more personal meeting with them at help@genesisblockha.com, or you can also give them a ring. Now, the purpose of today is that we're going to be having a chat with a very special guest. He is an educator, he is a developer, and he's also somebody who is a Bitcoin maximalist. He's very recognizable because of his hat. So he's got a cowboy hat on, and I've also got my baseball cap with a big B on here. I know it's actually a sports team, but I'm going to call this as a Bitcoin hat over here. The purpose of today is to try and explore more on how we might be able to drive more Bitcoin adoption, because there's a lot of things that Bitcoin can help to solve. So without further ado, can we please give a big warm welcome to Jimmy Song. Jimmy.
All right. Well, thank you guys for having me. I understand many of you are getting up at 7 in the morning in order to watch this from Hong Kong, no less. Very appreciative of this opportunity to hang out with you and talk about some of this Bitcoin stuff. I know that it's kind of crazy over there, and I almost feel like the one that should be asking questions to you guys and not the other way around. But you know, this is a Bitcoin meetup, so here for your questions. I'm here to hang out and talk about all the things that are concerning you with regard to Bitcoin. I wish I could do something about, you know, mainland China's interference, but that's not something I can do anything about.
Yeah, I mean, the main purpose of today is just focus more on Bitcoin, what's going on in the market with DeFi. But I think providing a little bit more context about yourself, Jimmy. I follow you on Twitter. I've heard a few of your podcasts, and you're very recognizable when somebody types in Jimmy Song or Bitcoin on any of the Google searches. But from your own perspective, what we see online and who you are aspiring to be or trying to evolve in the space, can you tell us just a little bit more about yourself?
I'm a Bitcoin developer, and I've been a developer for, oh gosh, 22 years now. So I've been in the you know, technology space for a very long time. I've done a ton of startups. I've had 2 companies that went public while I was there. I had a 3rd one that went public after I left. There's you know, several startups that went nowhere, others that went places. So I've been a developer for a long time. I got into Bitcoin back in 2011. And I've been contributing to various open source projects, including Bitcoin open source projects, since about 2013. So, you know, I guess you could consider me a veteran of the space, but the hat is fairly new. It's something that started in 2017. And that it was more to let people know that I was from Texas. But since then, it's evolved into a little more than that. So besides the fact that you know, people can instantly identify where I'm coming from if they see the hat, the other 2 reasons why I wear this hat are one, I really like the old West era, right? Like the cowboy ethic. You know, back in the 1800s, there was always this ethic of "Go West, young man, go West, young man," and the idea was, if you stayed out east, you would have to compete, whatever you were. You could be a baker or a doctor or a lawyer or anything. You would have to compete with all of the people that were already established for 20, 30 years. So it was kind of hard for you to get work. But if you went out west, oh, there was opportunity for you. So really, in a way, the hat represents for me, you know, this push to go out west, to go towards the frontier, something new and different, and finding opportunities there. Because for me, Bitcoin is that opportunity. And the other reason that I wear this hat is because Bitcoin is in many ways the Wild West. It's you know, a lot of opportunity, but also a lot of danger. And it's a reminder to people that you need to be careful out there. Otherwise, you're going to get scammed out of all your money.
And whilst you're on that topic, I couldn't help but just keep looking at your background. You've got a really cool image. It's heading west. I assume it's all the way from Texas, heading over to maybe Japan with the Bitcoin logo and some sort of a samurai type of background. Looks really cool.
Yeah. That was something CoinDaddy I think made for me. He did like a really interesting rap on YouTube a while back. You know, with me rescuing Tone or something, and you know, like there's Mike Novogratz in there and stuff like that, and they made it. So I was like, all right, I'm gonna use it as background on Zoom. So yeah, people get confused, especially if I'm like logging into a Bible study or something, and they show this background. So yeah, but it's fun. So
it is. It's definitely fun. Well, thank you for sharing more about yourself, Jimmy. There's one thing that I was reading about online was you published a book called Programming Bitcoin, but more recently, you also published another book that's more for the masses. And it's called this, I'm just going to quickly share the screen, The Little Bitcoin Book. It was published last year. It's only 116 pages. It's about why Bitcoin matters for your freedom, finances, and future. And there's actually a whole episode with this gentleman from Dale at CoinDesk, and he's asking you all about what is the value of Bitcoin, how the book is structured. So I'm not going to go through that at all. It's more about, this chat was about a year ago, and now we fast forward to about 1 year later. Is there something that you might be able to share more of what you were thinking back then and the developments now and your different perspectives of before and after?
Yeah, so I'm one of 8 authors for that book. And, you know, my co-authors and I actually did a show for Bitcoin Magazine earlier this month on the 1-year anniversary, where we talked about, Bitcoin's developments around the world. The 8 of us, I think, represent 5 different continents, and, we're of all ethnicities and colors and stuff like that. So it was a really cool book to be a part of. But the idea behind this book is to be able to give it to your no-coiner or pre-coiner friends and get them to understand the value proposition of Bitcoin, not just from a number go up perspective, but also from a human rights perspective, which we spend a significant amount of time on. The book is, like you said, 116 pages, but like the last 30 pages are Q&A. So you can literally read most of it in like one sitting, a couple hours, just sit there and get it done. And, it's meant to be a light read. It's not heavy technical stuff. There's no discussion of, multi-sig or, what hardware wallets to use or anything like that. It's just, hey, here's this Bitcoin thing. And here's why, here's everything that you should know about it in order to get started. And if you want to dive deeper, there are other resources that we list in the back to help you.
Thanks for sharing that, Jimmy. In terms of this book, which you also previously mentioned, is that you like explaining or trying to teach Bitcoin to people that might be coming into the space. Previously, you had a pretty simple definition of what Bitcoin is, but it's one of the easier ways to describe Bitcoin. Like, how would you define Bitcoin, or what is Bitcoin to you?
It's money. I hope that's obvious. It's money that's digital. So the 3 words I use to describe Bitcoin are decentralized digital scarcity. And we've never had anything that has had that specific combination. We've had centralized digital scarcity. World of Warcraft gold is a good example, and so is the US dollar. We've had decentralized physical scarcity, gold, silver, things like that. We've never had decentralized digital scarcity, and that opens up a whole world of different possibilities and security and convenience that we've never really had before. And it's a form of money that is not centrally controlled. So that means that it's a lot easier to trust in a weird way. And it's digital, so it means that it's a lot more convenient than anything physical. You don't have to move gold bars around, for example, and it's better in that way. And to this day, there's nothing else that is also decentralized, digital, and scarce. We have lots of other things that try to be, but none of them are decentralized. So Bitcoin is the one thing that we can all point to and say, this is a real evolution of money.
Thanks for sharing that. I think one of the things that I tried to do to try and prep for this meeting was I was looking through your Twitter. You asked the question of what unexpected thing happened. And all of a sudden I found this tweet over here, which he was talking about, just beware though, because Bitcoin would create an even more elite-driven system since a very small number of people own over 85% of all Bitcoin. So going back to your earlier comments of how there might be a decentralized protocol, and if there are no ways to really influence this other than using math and trying to have a very systematic way of mining these Bitcoin and ensuring the protocol, but at the same time, there's a handful of people that actually have access to such a large amount of Bitcoins and they're able to manipulate the system, then there is some centralization to some point or some part. So the question is more along the lines of, we're trying to use Bitcoin to solve a lot of problems, but at the same time, as a Bitcoin maximalist, do you see Bitcoins being controlled by a few people that have a big bag of Bitcoins as being a weakness or a strength, or how do you see that?
Well, first of all, I think that's wrong. I don't think it's controlled by a few people. They might have large Bitcoin balances, but that's different than being able to control Bitcoin. It's not like the fiat system where if you have a lot of money, you're able to buy influence in something centralized. So, for example, if you are a large investment bank, you can influence the Federal Reserve just by threatening to default on a loan or something like that. That's not something that you can do in Bitcoin. You can have 100,000 Bitcoin, but that doesn't mean that you have any more say in the development of Bitcoin or the direction that Bitcoin goes. You really all you have are the Bitcoins, and you're just one node among many. In fact, if you try to hijack Bitcoin and do something else with Bitcoin, you're not going to be successful. And we saw that very clearly in 2017 with the 2x hard fork. These were some of the biggest businesses in the Bitcoin space that were behind 2x, that controlled a lot of the actual Bitcoin tokens, but they weren't able to execute their plan or influence Bitcoin enough to be able to get what they wanted. And that's one of the data points that really strikes a lot of people. How did they not manage to get something passed that they wanted? So in a sense, I reject this whole premise that, just because some people have a lot of Bitcoin, that they have a lot of influence. That's true in the fiat world. It's not true in Bitcoin. In fact, some of the developers I know actually don't even own any Bitcoin. These are Bitcoin core developers. And it's kind of hard to believe, and I'm not entirely sure I believe them. But to some degree, given their ideology and how they think about Bitcoin, I'm actually not that surprised. It is entirely possible, what you do to influence Bitcoin and the amount of money that amount of Bitcoins you own are not necessarily connected. And that's a good thing, because in Bitcoin, it's a meritocracy. It's about getting consensus, and it's not about how many Bitcoins you have or how much, how much political influence you might have over different companies and so on. And the proof is in, what happened to 2x. So there you go.
Thanks for sharing that, Jimmy. I think with Bitcoin being a form of money and developers not actually owning any Bitcoins, that kind of questions or brings a lot of questions to my mind, because the next thing that I'm hoping to share is one of the big initiatives we're trying to do at the Bitcoin Association here in Hong Kong is to drive crypto adoption. But what we see is if developers who are building on the Bitcoin protocol, or trying to build interesting companies are not holding Bitcoin themselves, then how do we drive adoption? I mean, what ideas do you have as an educator on, one, demonstrating the value of how important Bitcoin is, and then actually getting people to actually own and transact and use on Bitcoin?
Yeah, so here's what I've noticed over the past 7 years. I've tried every kind of thing to get people to adopt Bitcoin. What I've seen that doesn't work are things like giving free money to people, right? Like this is what Roger Ver does with BCH and did with Bitcoin before that, is just go to people, give them, some small amount of Bitcoin and hope that that sticks. If anything, most of those people aren't interested, and their instinct is right. If they're getting something for free, and then it's probably not worth anything. The fact that they didn't have to do anything to get the small amount of Bitcoin that they got from somebody usually means that they're not going to get into it. Once in a blue moon, you'll get somebody that was already interested, that got that little bit, and then starts to invest more money and so on. But that's more the exception than the rule. So that's not how you get more adoption, by giving away free money. What else doesn't work is arguing that it needs to be a payments platform, that it needs to replace PayPal or Visa or something like that. Vast majority of merchants that have adopted Bitcoin for those purposes have since removed support for Bitcoin because they simply don't get enough business. Turns out that the main use of Bitcoin is as a store of value for something that is a hedge against monetary expansion, against market volatility and so on. Despite being volatile, it's generally done very well against almost every other asset in the past 7 years or so. So that's also not a very good argument. What ends up driving adoption, interestingly enough, is price. As the number goes up, it becomes harder and harder to ignore. When you see the history that it has, when time passes, people that were dismissing it like 7 years ago are now coming back into it. So the CEO of MicroStrategy, for example, back in 2013, called it something like a Ponzi scheme. But, it stuck around. And the fact that the number kept going up made him really look into it a lot more. Bitcoin's one of those things that's very easy to dismiss, but the number is not easy to dismiss. It's something that is always there. And if it keeps going up, you literally can't ignore it for that long. So the CEO of MicroStrategy eventually saw, okay, you know what? We need to do something with this. And it's a much better way to store our reserve assets than in cash. And guess what? He bought $250 million worth of Bitcoin. Now that's real adoption. And that's adoption at the level that is way more effective than trying to convince, 100 friends or family to buy $30 or even $1,000 worth of Bitcoin. It just doesn't compare in terms of price impact and adoption impact and so on. Somebody that's willing to put in $250 million into this is giving the market a much better signal than somebody that's just buying $10 worth. So all that is to say that the only real effective marketing or adoption technique that I've seen is the passage of time and people that are succeeding in having invested in Bitcoin and the returns that they get. Really, envy is the best way to get people in.
All right. I think that's a very good summary, because there was an article that was shared with one of the members of the Bitcoin Association. It's actually called "Why the Yuppie Elite Dismiss Bitcoin." Have you heard of this article before?
Yeah, I think I read it, yeah.
Yeah, for those of us that are joining that haven't heard it before, essentially they explain a diametrically opposite environment where there's three groups of people. The first group have a lower IQ, and this other side of the extreme are the real brainiacs of this space. Both of these opposite extremes are expecting Bitcoin to moon and the price to increase. And with the increase of price, as Jimmy just shared, then the attraction and adoption of Bitcoin is supposedly higher as well. But what we're seeing quite a lot in the middle space of these individuals here is that there's still some resistance in trying to join the system or trying to like get on board into Bitcoin. They actually had a question of what percentage of people in this class would actually join. It was like 0.01%. And we're talking about individuals that are supposedly very well connected, very well off, and very interested. And this article essentially did a quick survey to say there's four groups of people, and there's four groups of people. You have the people on the top right, the MBAs, total yuppies, who might not actually be as interested in just taking a Bitcoin maximalist view versus over here, the people that are on the left might have a higher IQ, but they might have less faith in the trust and trust in the system. So therefore, they'll become more of a Bitcoin maximalist. And another summary of this article in the end is just the people in the know, the yuppies, the MBA grads, people that trust the system, also tend to not really be as strong of a Bitcoin maximalist compared to people who might be at the bottom left of the spectrum. It's quite interesting that it's having this article up, but Jimmy, I was wondering what your thoughts are on one of these perspectives, because you talked about driving adoption is because of Bitcoin being a store of value, because of increase in price. But if we were to focus on just the middle section of the people inside of this bell curve here, other than the store of value and maybe just the price increases, do you have any ideas on what might also be able to attract people that are in the top right who have absolute trust in the system at this moment?
Well, so I don't know if my interpretation of the article is different, but when that the whole article is talking about how that bell curve isn't actually explaining very much, because according to this graph right here, people with high IQs, there is a subsection of really high IQ people that don't want to get into Bitcoin at all, and this included people in his MBA class, the people that are obviously, to get into a business school, especially a high caliber one, you need to have a pretty high IQ. So his question was, you know, why aren't these people even looking at Bitcoin? And the conclusion that he came to was that they trusted the system. And the people that trust the system and have high IQ, I think they can reasonably expect to be at the top of the hierarchy of the fiat system, the current system. They could potentially move their way up the ladder, if you will. They could become future CEOs or future politicians, or maybe even future Federal Reserve chairman or something like that. So for them, they don't look at alternatives because they already trust the system and they're trying to work their way up that ladder. Whereas people that have high IQs and don't trust the system at all, well, they tend to be the Bitcoin maximalists because they don't trust the system. They're looking for something else to trust. They see that Bitcoin is a trustless, permissionless system, and they go, okay, well, this is obvious that this is something to adopt and look at. If you're sort of less, you have a lower IQ, but you don't trust the system, Bitcoin is again attractive because it looks like an alternative to the current system. If you trust the system and have a low IQ, but you trust somebody else, then it's possible for you to get into Bitcoin as well. But that's what this this graph showed me, and that's what I got out of it. As far as this graph and adoption, how do we change this graph? I think it's pretty simple. As trust in the system erodes, then more people naturally move towards the left side of this quadrant, or the high IQ people go from the upper right to the upper left. Low IQ people go from the lower right to the lower left. So and that's happening without anything on our end, right? Trust in the system is eroding because it's showing itself to not be very trustworthy. And the last 5 months clearly have shown that the system is not worthy of trust. I mean, you guys in Hong Kong, of all places, should know that. But as the trust in the system erodes, I think you naturally get more Bitcoin adoption, more people interested in Bitcoin and so on.
Thanks for sharing that, Jimmy. That's a very interesting insight. I might have had a different interpretation, but I do see how there are different groups of people that are now trending towards Bitcoin, especially with the current system and the current situation that's happening globally. But another word that really rings to me personally is trust. If someone wants to get into Bitcoin and they're wondering, it's a store of value, the price is increasing, but where do I actually keep or store my value and my assets? From a developer's point of perspective, what would you say is one of the safer ways to store your Bitcoins and your assets? There's options like paper wallets, there are cold wallets, there's custodial exchanges, there's online exchanges, and there's so many different options. But coming from a non-technical background, if someone was to trust and believe already that Bitcoin's value is going to increase, how do you recommend somebody who's new in the space to easily, safely, and secure their Bitcoins? What do you recommend?
I mean, I think a multi-sig solution is probably the way to go. It's not easy or simple, but that is improving every day as the user experience portion of that continues to get developed. I would say that would be the most secure way. Keeping it on an exchange is generally not a good idea. Though exchanges have, better security than some people. I mean, if you're like that guy that lost like 1,400 Bitcoin using like an old Electrum client or something like that, that would be horrible. So it depends on your level of technical skill and how much you're willing to learn and so on. There are people that argue it's better to keep it on an exchange than like on a paper wallet that you're going to lose anyway. So it really is dependent on who you are and what you're comfortable with and so on.
For somebody who might be new to this space, and one of the big barriers is on where to buy. They might have Genesis Block as an option to buy, or they might buy from an exchange. But the next really big question is just where do they store? I know you mentioned it depends on who you are. But are we able to drill down a little bit on the different spectrums of people? Let's say one spectrum could be someone who's not a programmer, but they're able to buy the assets in whichever form or way. Then on the other side of the spectrum is somebody who's more intermediate. They might have a preference to have something that's more convenient, but still be able to securely store their assets. And on the very, very opposite extreme is obviously a developer who's got the programming skill and could probably already find out the best way that's going to best secure their assets. In each of these three scenarios, what do you recommend as a way to be able to kind of store their Bitcoins if we had these three scenarios?
Well, so if you're like an 80-year-old grandmother that is not even comfortable getting on the internet, probably the best one is something like an open dime. Put a bunch of Bitcoin on the open dime. They're very comfortable storing physical things, and they can go put it into a safe or a bank security deposit box, something like that. Maybe even bury it in their backyard, whatever. But if you're comfortable, most people that are completely uncomfortable online can be comfortable, storing something and so on. Something like that might make sense. You can also do something similar to a paper wallet, basically a seed backup and put it on there. They're probably going to need somebody's help in order to do a lot of that. But that's an option. Usually people that get into Bitcoin have somebody that they trust with Bitcoin anyway. So if you're fine trusting that person, then get them to help you set it up. If you're somebody in the middle, that's not completely like dumb on the internet or something like that, I would say a hardware wallet is reasonable, and a multi-sig sig hardware wallets is probably even better. So something like a 2 of 3, Casa and Unchained Capital both have very affordable products that you can use in order to do 2 of 3, and they keep one of the keys. You still control everything, but you can lose one of the keys and still recover and something like that. So hardware wallets are not that hard to use, and they have a physical security component to them, which is good as well. And it's a little bit harder to hack those hardware wallets. As you need the physical possession of them. If you're like really into security and things like that, I would go for a multi-sig setup, like 5 of 7, something like that, and keep it in different geographic jurisdictions, and have different vendors among those. These should be mostly hardware wallets, maybe one software or wallet for one of the keys, something like that. Have some sort of like estate plan, some way of distributing it. That would be probably the most extreme end. But yeah, those, and there are many options in between, but those are the ones I could think of.
Thanks for sharing that. I think probably going to need to do more research on all the different ways to securely store your assets. Because as you mentioned, the higher the price goes up because of the situation with the faith in the governments globally. And as a store of value, we're going to see where it's going to go there. But maybe we can look at something a little bit more current as to what's happening right now. I know that you're a Bitcoin maximalist, but with the DeFi space completely changing the whole space, its prices are going very high in a very short period of time. I'm wondering if you can maybe share a little bit of insights into what you think of the whole DeFi moment that's going on over here. I've had a little bit of a look in terms of, for example, Sushi and Yam, or even YFI, that in July was less than 1,000, and then all of a sudden they went all the way up to almost 38,000 US dollars. As a Bitcoin maximalist, what are your views on DeFi?
I think it's a scam. Let me just put it that way. So the reason why I think that is that there's nothing actually being produced, right? If you think about financial transactions, oftentimes there's some value that's being added in whatever transaction. So if you are a textiles manufacturer, you get cotton from some place and then you do something to it to make it more valuable. You make it into clothing or thread or whatever, and then you sell it. So you add value in between, right? That's how you can measure that it gets more and more valuable over time. So a piece of steel might become like a spring in a Swiss watch or something like that. All along that path, there's value being added by, fine tuning it or changing it or making that good more valuable along the way. With DeFi, it's literally just money changing form. That's it. It's not adding any value. It's and by definition, it has to be a zero-sum game, and it's not decentralized in the least. There's nothing decentralized about a loan. So, in a sense, when you're just moving money around, why is this going up? Well, it's going up because a lot of people are buying it because they think this is some interesting way to make money without doing much work. And usually those are Ponzi schemes. These are pyramid schemes. These are ways in which people are going to get wrecked. There's certainly going to be people that make money, and in any scam or pyramid scheme or whatever, there's always a small minority that are making tons and tons of money. But the vast majority of people that get in lose. And for a good reason, because it's a zero-sum game. If it's a positive-sum game, if you're actually adding value, then yeah, you can make money off of it. But there's nobody adding value here. It's all money moving from one person to another. There's no product that's created. There's nothing of use to the economy that anyone is actually adding. So ultimately, this is a bubble that's happening. A lot of, almost all Ponzi schemes have this sort of like bubble where they go up to a certain number, and then it hits some sort of inflection point and it comes right back down. I don't know if we're anywhere near that. Obviously, there's a lot of hype around it, a lot of marketing that's gone into it, and so on. But my perspective is that this is, I mean, there's no actual value being added. A lot of these products are so complicated as to defy description, really. And it's, you know, you have to have like multiple degrees in, you know, advanced quant finance or something like that in order to understand what the hell is going on. So I suspect that a lot of people are going to get wrecked. And then they're going to promptly forget when the next quote unquote, you know, hot thing comes out, and they'll go towards that and they'll do this all over again.
Thanks for sharing that. I can see your perspective on how, because there's no significant value added, it's not seen as valuable as, let's say, Bitcoin. And one of the things that I was told to get when getting into this space was to read through the Bitcoin white paper. But for someone who's not a developer, who's not that technical, looking through those 9 pages at some points was actually almost a foreign language to me. So with Bitcoin being founded on proof of work, and there is significant value that's being added, for somebody who's coming into this space, reading through this 9-page, pretty in-depth and deep article, do you have any insights on how someone might be able to get the basics of this white paper? Or how do you read that white paper more effectively to really see that value that's being added on each of those layers and chains?
I would just read it and try to look up the words that you don't understand, or ask on Stack Exchange or something like that what those things mean. But basically, you know, it requires some technical expertise in order to really understand a lot of it. If you don't know what a hash function is, it's going to be very difficult to understand proof of work. And if you don't understand what digital signatures are, a lot of it's not going to make sense. So learning some of those concepts, it's kind of like learning or reading Shakespeare or something like that. A lot of it is just sort of contextual. You're going to have to understand it a little better. You know, I was at one point working on a book to sort of go through the white paper and tell people exactly what every sentence means and so on. I stopped work on it. Maybe I should go back to it if there's more there's interest from people like you. But that's how I would try to approach it. Is you know, go through it. I have I think I did a read through of the white paper on my channel on YouTube at some point. So you might want to go look that up and listen to it.
Yeah, I think one way to learn is also through each other. And what I found particularly helpful in Hong Kong for the Bitcoin Association is all these different people with different backgrounds that have different perspectives. And learning from each other is one of the best things, especially when there was no social distancing before. In Hong Kong, we only have 2 people per meal setting at this time. But when we're able to eventually eat together again, I'm hoping that we might be able to even go and attend one of your steak dinners or steak meals. I'm a big meat lover, and to actually sit next to you, see you in person, and maybe pick your brain or pick somebody else's brain would be very helpful. But can you tell us more about your origins of starting that steak dinner? Because as a steak lover, maybe we can do something similar here, maybe not something as lavish, but why did you choose steaks? Like, what's
well, are you familiar with the whole carnivory thing? I don't know if that's what you want to talk about, but basically, there's a group of us that are in Bitcoin that have gotten a lot of benefits off of carnivory. And carnivory is a diet where you just eat meat and animal products. That's it. So what that ends up doing is cutting out all fruits, all vegetables, certainly anything processed in the grocery store. And it's helped a ton of people, not just in the Bitcoin community. There are entire communities online that talk about how meat heals a lot of their physical ailments and so on. I just met a couple of people at BitBlock Boom this past weekend that were talking about how they learned about carnivory at the previous BitBlock Boom last year. And then, you know, they've been eating meat ever since, and they've got rid of so many of their physical ailments, some sort of inflammation, arthritis, back pain. They've lost 70 pounds, something like that. So these are all benefits that come from that. I can give you a much more detailed explanation of why I think this works and all that. But I ultimately, if you're curious about it, just try eating only meat for a couple of weeks and see what happens. You know, that may be a little bit difficult because I know meat's a little bit expensive in Hong Kong. But you know, I know I felt a lot better. I've been doing something like the carnivore diet for about 2 years, and you know, my weight's been pretty steady. My power lifts are going up. I'm able to sleep a lot better. You know, and lots of really good benefits. You know, but ultimately it's something that if you're curious about, you should try. As far as the actual steak dinner, you know, we started, I think, I tweeted out like a few years ago, like, you know, there were all these like parties at Consensus. I think it was 2018. And there were all these parties, right? And they were always just like weird, you know, scam coin parties, right? Like it was launching some ICO or something. And I knew it was a scam. I didn't want to go to any of those. So I tweeted at some point, like, you know, if there were just a bunch of Bitcoin guys with Bitcoin people with stake, I think I would rather go to that than anything. And lo and behold, Pierre Rochard organized something, and it was a huge success. So decided to try that at the next conference I went to, and turns out that there's a lot of people that are interested in that sort of thing, and less on, you know, oh, let's watch Snoop Dogg perform at the Ripple party or something like that. So that's where that came from. And, you know, I've been to a lot of those. And what I found is that you do talk about some Bitcoin, but what ends up happening is that you also talk about lots of other stuff, including stuff like carnivory and, you know, powerlifting and fasting and, you know, lots of alternative things, as people that are into Bitcoin and me tend to be into lots of other things that, you know, we might be interested in finding out about. So it's a really cool thing. Obviously, we haven't done one in a while because of the pandemic, but I'd be totally open to it when I'm in Hong Kong in, I think, March of next year. That's the latest on token 2049, which is when I'm supposed to be in Hong Kong.
Hopefully we can explore the chances of maybe organizing some carnivory meal sometime in March.
Mm-hmm.
I love the community, how not only is it very diverse, you've also not just talking about Bitcoin as a store of value, but maybe as a way to have some related health benefits as well. So it seems to be a way of life. It's a lifestyle. So I'm sure that if we look at the community, we are now so much more connected than before. You're all the way in the States, I'm all the way here in Hong Kong. But one of the best ways to engage with people is to just try and follow them and try to understand what they're seeing in their local respective region. So out of curiosity, Jimmy, I think you've been in this space for such a long period of time, but there's always some individuals that might not be getting as much attention as what they deserve for what their area of interest or specifics are. If we were to look in this Bitcoin space, who do you follow currently that you think maybe deserves a bit more attention? Do you have like maybe one or two Twitter handles that you might be able to think off the top of your head?
Well, it's always tricky because a lot of these guys that do a lot for Bitcoin, they don't actually want the spotlight. So, you know, everyone knows like core developers like Greg Maxwell or Peter Woola or Matt Crawler or something like that. But there's dozens, literally dozens and dozens of other ones that have contributed a significant amount. Like one of the questions that I always ask when I teach is, hey, who here knows who Corey Fields is? And almost nobody knows who Corey Fields is. Corey Fields is a top 5 contributor to Bitcoin Core, but nobody knows who he is because he doesn't have a Twitter. And up until I think he disclosed the BCH vulnerability, he didn't have a Medium handle. I think the only way you could get in touch with him was on IRC or his GitHub account. So I mean, that's one guy that I think is fantastic, but he obviously doesn't want that much attention, despite him having done so much for Bitcoin. And there's a lot of guys out there like that. I mean, I think AJ Towns is a little more popular than he used to be, but people still don't know that he's like the author of one of the Taproot bips, like a lot of the Taproot stuff, or one of the co-authors anyway. You know, there are other people that you might not know, like Fanquake and who's Michael Ford, Marco Falque, just, you know, like names that you probably have never heard before, unless you happen to be a core contributor and know some of these names from that. So I would say most of those guys are worth following on Twitter if you know their handles and so on. But like they don't post that often, and honestly, they're just sort of sitting down, putting their heads down and coding, and that's what gives them joy. As far as like sort of influencers that might be interesting, I don't know. There probably are some, but I don't know. It's always a little suspicious when people are looking for attention, like you know, whether or not to give it to them, because you don't know if they're going to try to exit scam, say like Richard Hart did, right? Like he came on the scene, he was all looking for attention in 2017. It turned out that was all in order to do his hex scam and get money that way. So yeah, I'm a little wary of people that are trying to get attention for that reason. So I'm not going to recommend any of those. But the people that don't want attention, like core devs and stuff, it's hard for me to know whether or not they want the attention. So I can't really answer your question.
Well, luckily this is being recorded, so later on I can Google those names or try and follow them in another way. But on the topic of devs, I was reading this other article on the Triple H, which is essentially a dream team that you want to have to try and build the next great big thing. If I was to share what that is, I'm going to quickly just share one slide. It's the perfect team of a hustler, a hacker, and a hipster. So working with a hacker to actually build the product is oftentimes the part where you begin with, because without the product, you can't really have a hustler sell it, and you can't really have a hipster try and improve or design it. But at the same time, in order to attract that developer, there's a lot of individuals that are going to be trying to take that good talent away. What do you think are some of the best ways to attract good developers if you're a startup and you're still testing an idea out and you might not have a track record yet? What are some of the do's and the don'ts, essentially?
Good question. So I kind of disagree with this. I think hustler and hipster are basically the same person. It's somebody to sell and improve your product, right? Like the hustler is going to give you a lot of feedback from the potential customers anyway about like what you need to do in order to make the product better and so on. And they can really be the same person. So for me, the perfect startup team is somebody that knows how to sell and somebody that knows how to build. And those are the two that you need. Now, if you're somebody that knows how to sell, well, you better be good at selling yourself too, because that's essentially what you have to do in order to get a very good developer. The kinds of developers that are going to be applying to be your co-founder, they're not necessarily the ones you want. They're probably not that good at it, and they want to get in because they see dollar signs before their eyes or something like that. The kind of people that you want, you're going to have to search out, and you're going to have to sell yourself to them. And if you are a hustler, you know how to sell products, you better be ready to sell yourself, right? Like, you know, what's good about the situation? How are they going to benefit? You know, any good salesperson I've ever met speaks to you from your perspective and says, okay, here's what you're looking for. Here's how I can, how my product or how I can help you fulfill the needs that you have. And that's what you have to do as a salesperson anyway. So, you know, applying that to your potential co-founder is exactly what you're going to have to do. And you're going to have to hang out where a lot of good developers hang out, and you're going to have to figure out good heuristics to figure out which ones are good developers and which ones are not, because a lot of them can talk a good game, but you know, the minute that they have to build something, you know, they suddenly have all sorts of delays and can't build anything for crap. So Yeah, it's more art than science, and there are no hard and fast rules around any of this. But you know, if that's the direction you want to go, then you're going to have to invest a lot of time and money and energy into you know, finding someone that you do in selling a product. That's the advice I would have.
Thanks for sharing that, Jimmy. On the topic of remembering what you mentioned early on in this discussion, you mentioned how you were able to build two startups, exit them, and you've worked in a few other startups that didn't go so well. Are you able to share more on some of the key differences on what made one of the projects more successful than some of the other ones?
Yeah, good question. So this the pattern that I've seen is almost with respect to always respect to the product. I've been on fantastic teams that went nowhere. I've been on less fantastic teams that managed to succeed fantastically. So what's the difference? The difference was product market fit, and it's really having a market to actually sell your product. And you know, it sounds really simple, but this is something that a lot of startups like ignore all the time, is that they think that they know what the market wants, and then they find out later that they didn't. Two of the two startups that ended up IPOing, the thing in common with both of them was that they almost accidentally fell into the market that they did. One was Athena Health. I don't know if you heard of that company, but it's out of Boston. But I joined them, I think when I was I was like employee 200 something. And then, you know, they're now like a big company and have done a lot of stuff. But they originally began as a OB-GYN clinic. They wanted to, you know, like help deliver lots of babies and run a bunch of these clinics so that, you know, birthing would be safer and stuff like that. But they very quickly realized that, you know, the big problem in healthcare was getting paid for the services that they did. And so they, as you know, in order to stay solvent, they wrote the software in order to, you know, take care of a lot of their billing needs. It turned out that, you know, when they were talking to other OB-GYN practices, they were almost immediately like, oh my God, can you give us that software? We'll pay whatever amount of money for it, because we're suffering like quite a bit, because we're not IT experts and blah blah blah. So they started selling it, and almost immediately, you know, that got the ball rolling, and that gave the company the market. It wasn't necessarily that they were looking to get into that particular space. It's much more that they found this pain point, and then they solved it, and then it turned out that a lot of other people wanted it solved as well. The other company that went IPO, that was very similar. The CEO actually had a company before called like Divorce Care or something. He had just gone through a big divorce, and he wanted like a website where divorced people can go and like sort of commiserate with each other and stuff like that. And he was trying to figure out a way to monetize it, and he noticed that like credit card signups paid a ton of affiliate money. So he was like, okay, well, this is how we'll monetize it. Except, you know, divorced people didn't really want to like apply for credit cards or whatever, but he recognized that that was a market, that if you can get affiliate money, that could be very, very profitable. And he ended up starting a site for just collecting all of the affiliate money. It was Retail Me Not. And basically they went around and found all of the ways in which you can get affiliate money, and that's how he built that business. And that's that, like, it wasn't something that he was targeting, it's just something that he recognized. So other startups that I've done, you know, generally the pattern is that the founder wants to create something and then finds out that there's no market for it, and tries to create a market where one didn't exist. And that usually generally does not work. If there isn't a market for your product, you need to change the product, or you need to get into a different space altogether, or something like that. And that's a lesson that a lot of founders have a difficult time learning, because they're so married to their idea and say, oh, okay, well, I believe that there's this, there's a market for this. I mean, I've consulted with people, for example, that are like, oh, you can make this and it could be blah, blah, blah. Well, have you talked to people in the space that you're targeting? They're like, no. Well, that's a big mistake. And then once they talk to them, they find out, okay, well, actually, they don't care about this feature or that feature at all. And it turns out that, the way they work is this, this, and this. This is the giant problem, by the way, with all these ICOs. It's exactly the wrong model for any sort of startup success, because you're defining what you want to build without checking if there's a market for it at all. This is the giant problem. There is obviously a market for gambling, and I think that's where a lot of these DeFi people are getting in. They want to gamble and make like 10x their money and be able to sue someone if they don't, or something like that. But for the vast majority of things, it's just crap that they want to build. They don't do almost any market research because they've already raised the money anyway. So something like Augur, for example, that's a quote unquote gambling ICO, right? Like where you're supposed to use tokens to set up bets or whatever. I've talked to several, professional gamblers and so on. And they're like, this solves nothing. Like, I would much rather go to an offshore book and bet. I have a lot more liquidity. I have a lot more varieties of bets that I can do. And that's where I'm going to try to find my edge. With Augur, like you have to pay in order to create a bet, and then you have to hope that somebody takes the other side of the bet and so on. So they're like, this makes zero sense. If they asked any of us, like even a few basic questions, they would have known that this is completely unviable. So in a weird way, like the ICO space is completely littered with bad startup ideas. It's not anything that would ever pass muster, when facing the market. But that's unfortunately how how things go, and a lot of dumb money has gone into it, and dumb money it'll stay.
So the key is definitely product market fit. But let's say that you do have a product and it does fit the market. Another very important essential element is cash flow. And many entrepreneurs are struggling with when is the right time and what is a comfortable amount to raise. From your experiences, what do you see is a better way to value or forecast how much cash flow you think is necessary to continue this product market fit?
Well, I mean, honestly, I would advise you to not raise any money if you can. Generally what happens after you raise money is that that the people that are giving you the money will want you to be either Facebook or bust, right? Like this is the unicorn or bust mentality that most investors have in this market, which is, you're either going to have to get gigantic or you're not worth doing. And those are some really terrible incentives. And this is in part because of all of the incentives around fiat money in general. But you don't want to get on that, because they're going to make you work like 90 hours a week if you are successful, and 120 hours a week if you're not. So it's horrible, and that's not a place that you want to be in if you can help it. If you have to take money that's definitely going to get you something tangible. So if you're going to be able to land a big client because you have extra money, then go do it. If you have orders that you can't fill, but you would be able to fill if you had that money, go do it. But it's generally not a good idea to sort of enslave yourself to a lot of these guys, because they're going to demand that you become $1 billion company, and you might not want to. You want the market, that even if you have product market fit, the market might not be more than $20 million, and that's simply not good enough for any angel investor, VC, or anybody like that. Maybe friends and family, that might make sense. Usually they're a little more generous in that regard, but like the time to raise money is when you're already successful, and you're going to have much more leverage anyway. And if you, as you said, if you already have product market fit, then you should be able to sell your product, and you should price your product so that you are able to make money and your customers are able to derive value. If neither of those is true, then your cash flow is going to be negative, and which means that you don't have product market fit because they're not willing to pay the amount that you need in order to sustain your business. So in a sense, I would suggest you really work on the product and make sure that it's something that people are willing to pay enough money for so that you do have some cash flow. And you're not going to be able to grow as quickly and stuff like that. And maybe somebody tries to swoop in and take your customers from under you with a similar product or whatever. In which case, that's when you maybe have to think about taking money and growing in that accelerated way and so on. But by then you would have a pretty good standard of comparison because somebody else will have raised money and that'll be a good comp. That said, save up your money and use your own money to do it because you're going to be a lot more efficient with your own money than somebody else's money. And this is a problem that happens with a lot of startups is that they burn through it really quick because one, the VCs are pressuring them to spend like crazy and grow like crazy. And two, it's not really your money. So you don't care if you're paying $250,000 for an Oracle license or some stupid. Instead of going with, all right, let's try this open source alternative and not buy it unless we absolutely need to. So it's that sort of thing means that you're going to be best off if you save your own money and do it yourself instead of taking other people's money and sort of playing around and doing it at I don't know. A lot of people kind of see it as, oh, I get to play around with other people's money. Yeah, but they're going to take your soul in exchange. So you don't really want to do that if you can help it. So yeah, that would be my advice.
Thank you, Jimmy, so much for sharing all these insights. I know we covered a lot of topics. When we had a pre-sync, you thought it might take 3 hours, so I've rushed through a few parts. We also have about 7 other people that's here. I wanted to open up the space for anybody that wants to have a conversation with Jimmy. This is recorded, so please be courteous. Everybody's giving up their time for this conversation. So I'm going to quickly mute myself. If anybody wants to raise a question, please do. Does anybody have any questions? Or just want to chat with Jimmy?
Hello, Jimmy.
Hey.
Hey, hi. My name is Eddie. How are you?
I'm good.
Yes. Actually, we met back in 2018, Hong Kong token 2049. So let me tell you a little bit myself. I got involved in Bitcoin 2015. I was a Bitcoin victim, become a Bitcoin enthusiast because I started to study it. I'm not an engineer. I'm not a software developer, but I'm an engineer. So I started looking at science and the math part. So tell you what I'm doing. I'm right now. I'm starting a book with Brian. We believe that education to the public is very important. And in fact, I've been teaching university and high school. Look here, we started this book. It's called My First Blockchain. It's all in cartoon style. Try to teach to the kids what the fundamentals are. Oh, can you see? Not too well. Oh dear. Okay. Anyway, so yeah, my first blockchain. So if you have time, I would like to send you a copy for review and possibly give us a few comments, if you don't mind.
My First Blockchain is the name of the book?
Yeah, the book. It's
okay, I'm immediately skeptical because I don't think there's a blockchain outside of Bitcoin that's worth doing. So I'm not sure what that book would be on. So I mean, that's like, I've looked at a lot of projects that quote unquote had blockchain in it, and almost all of them could be done better just by using a SQL database and an open API. So I don't know if that's what you want to hear, but that would be my analysis so far. You can send me a book or a PDF or something like that, but my suspicion is that it's I'm gonna think that it's ridiculous and that it doesn't add any value to anyone.
All right. Okay. Just tell maybe Brian, and you can tell a little bit about the book. Because the book is targeted for age 12 to 16. The reason why we
what are 12 to 16-year-olds going to get out of a quote unquote blockchain? There's been not a single case of a blockchain that's useful other than Bitcoin. So
I taught my son when he's 12. Yeah.
Maybe I can jump in here, Eddie. the background is that Eddie's actually a very passionate, enthusiastic member here in Hong Kong, and he has a son who he's trying to dedicate this book to try and educate his son and get his friends involved as well. So he and I actually worked on this project to try and just simplify Bitcoin and its origins, its present, and its future. And the title definitely needs to be updated. But if you have any insights or ways to improve the book, I'm sure that Eddie might be able to socialize and share that with you. And hopefully, when you have time, you can share your feedback. The title is already one of them that is definitely very helpful and will be updated.
Okay, so it's not on blockchain, but it's on Bitcoin?
Well, yes, it's actually Bitcoin, how it works, the fundamentals. But why we call it first blockchain is at the end, there's an academy token will be sent it to the students free of charge. So they get the first blockchain experience. I get a token, decentralized token. I can check it on Explorer and see how blockchain works.
It's a practice before they actually get on
practice.
Bitcoin.
Yes.
Okay, then you should use testnet coins, but I don't know why you would use your own token.
Yes. Thank you for comment. We'll definitely look into the title of it. Yeah.
Okay.
That's all. Thank you.
Yeah.
Thanks, Eddie. Is there anyone else who also wants to join or ask any questions? Cliff?
Cliff?
Hey, what's up? Yeah. So have you seen the NBT ratio that Willy Woo's been putting out?
I haven't, but I know he puts out some interesting stats. What did it say?
Well, I'm still trying to wrap my head around how it's a indicator, and but anyway, I wanted to kind of get your idea on how the markets are moving right now. Of course, it seems like the big money's coming in, and of course, there's groups that are shorting it, and long shorts. So there's like this battle kind of balance. But I wanted to see if you had looked at the NBT as a good indicator.
I have not. I might have seen it on one of Willie's tweets or something like that. The thing about price right now, though, is from a macro perspective, there's just so much money being printed. And we're seeing asset inflation all over the place. So stock market, despite these businesses not having great cash flows or whatever, the price of a lot of these are going up because there's nowhere else to park money. And this is partly why I think Bitcoin is going up as well. I know Willie thinks that we're in a bull market, and I tend to agree. I think it's only a matter of time before you hit all-time highs again. But we'll see. It's kind of a weird world right now with the pandemic and the economic crisis, and the election here in the United States coming up in a couple of months. So a lot of things converging in a weird way. Hard to know how they interact and what happens. I do think that the forces are the economic forces are very good for Bitcoin, as they usually are. So we'll see.
Okay. Are there any indicators that you actually look at, or you don't even? I know Tone looks at a lot of that stuff and starts counting candles and stuff like that, but
yeah, I mean the only one that I really look at is stock to flow, and we know what already happened back in May. So ultimately, I think we'll see the shortage of Bitcoin playing out. I'm hearing from a lot of OTC desks that they're kind of dry right now. They're trying to find more Bitcoin to be able to sell because there's just so many people that want to buy in large quantities. So I find that pretty credible, and I mean, even normal exchanges are running out of Bitcoin to sell. So it's a little odd. It's an odd time to be in because normally that would push the price up. So something is sort of artificially suppressing it a little bit. So I don't know, but it usually with things like this, it's gradually then suddenly. We're still in the gradually phase. So at some point it'll pop real fast and
Oh,
you
yeah.
won't know what happened.
Yeah. The panic will set in.
Yeah. FOMO.
Yeah, cool. All right. Anybody else have questions there?
Going once, going twice. Okay, well, then I'm going to close this off, but before I do, I just really want to thank Jimmy for your time, and also to Genesis Block for hosting this place. And I also want to give a shout out to two of the members from the marketing team at Genesis Block, John and also Joanne, who actually came here before 7 to help set up. Big thank you to also the audience who helped join as well. Jimmy, if there's anyone who wants to reach out to you or have any questions, what do you think would be the best way?
You know, I'm in the Hong Kong Bitcoin Telegram, so you just like ping me there, and you can message me on Telegram. If you're spamming me, I'll probably block you, but if it's reasonable, I'll try to answer your question.
All right, thank you so much, everyone, for your time. Wish everybody a great day ahead or great evening. Cheers.
All right.
Bye.
See you, Jimmy.
Thank you.
See you guys.
Yeah, cool.